All right, I'm going to start off with silver because look at that. We broke over that point. We had already broken above that going into Tuesday. Wednesday it was above, came back down, retested the top side of that pivot point, and we're headed up, creating new highs. This will be fast. The orders for silver are going through this week, and there's not enough. They cannot fulfill on the order because of the theft that occurred when the price dropped. So, watch out. Next resistance. I like to do this just so that we can see. Going back, so we have recovery is the first line. So we have this going down. The first point that we're looking at is recovery. So the all-time high is where we're going to see some resistance, maybe and maybe not, depending on how accelerated this gets. But then we will see resistance show up likely around that 1618 level, the Fibonacci level at 157, so probably 160. That'll be a psychedelic psychological level. And then another one at 193. Those are going to be the two major points that we'll see something like this again, where it'll come back down, where we'll see that resistance. It'll probably go up to that point, 157, and retrace back down between these two levels here to find that support from that all-time high. But that's silver on its way. Gold also creating some new highs this week. Should say not all-time highs, but newer highs going upwards. Gary made it. Even today, this little high that we saw, reset, there we go. Even today, this little high here, edged out above that. Lows getting higher. Coming back to the all-time high, we'll probably see this. After recovery, we've got a lot more of a... Whoa, there we go. 1618 level is at 6,350. But there will probably be a couple of psychological levels. I would say 6,000 is probably going to provide a psychological level as well, so there'll be some resistance there. But that the next market impulse will likely bring us into that 6,300 range. Right now, sitting at 52.35. Ratio dropping. Silver is gaining on gold. You can't really look at this so much as the pivot points and stuff like that. It's there, but they're not nearly as pinpointed as we see within the markets when they are evaluated to the dollar. But this here is a little bit of support right now. When it drops down, we'll probably find 50 ounces to provide some more support. But at the same time, we blasted off from 46 right up to 61 in a matter of a few hours. What was that? From January 29th. It only took 18 hours for it to the price of gold against silver to go down 33%. It's a little bit different way to think. When this chart goes up, it means that the price of the price of gold is going up against silver. It takes more silver to get gold. Yep. On the US 30, we've got another low that just got formed. Just formed a low here first thing this morning. Not a good sign for the US dollar. Not a good sign for the US markets. down a couple $1,000 now, so that's 4% from where it was at the all-time high. Maybe not 4%, 3%. Let's just see here. Yeah, 3.26% drop. Again, that's against the US dollar. Hey, Maureen. That's against the US dollar. And of course, what we're really paying attention to is the true value. And so to do that, we got to make an update because we've missed 2 days of market analysis now. So the US 30 is sitting at 48,867. 48,867. Divide that by the price of gold, 52.34. And now we're down to 933. On the silver side, we got the 48,847 divided by price of silver at 93.66. That makes it now 421 and a half ounces. 521. So the markets continue to decline against the metals significantly. Boy, oh boy. That is something else. Into the crypto markets, we got Bitcoin dominance dropping again, forming a new low earlier. That was on Tuesday. Let's go to the 4-hour chart, get a little bit more detail here. Still butting up against this short-term trend line here. If it drops again, if we see a drop coming down to this 57, we'll start to see some more green lights on the altcoins. Right now, things are still quite red. Bitcoin against gold. The ratio of gold to Bitcoin now at 12.52 ounces. Forming lows consistently. And then, of course, the actual Bitcoin price action we're seeing here. This is an interesting formation. We have this low here and then another low, higher low here with the intermediate ones. So this is a consolidation range not to be taken lightly. This lower highs all the time. We could be going downwards. We could be going down. That's the likelihood. Anyways, 60% likely when we see that kind of thing.
Bitcoin is going down compared to gold, is what you're saying there?
Yeah, good distinction. This particular chart is the Bitcoin price in US dollars, and it is showing a decline, but we also see the decline in Bitcoin with how many ounces it takes as well. Both. What's an important thing to check out on this chart here is that when Bitcoin was 38 ounces of gold, the last time it was $126,000 for one Bitcoin. But the time before that, it was 108,000. And the time before that, it was 69,000. So even though it's, the amount of gold was the same, the dollar value was different. And what we're seeing now is a big drop on the price in comparison to gold, simply because Bitcoin has been on the decline. But we're using that as a benchmark because that is an all-time high for gold. All-time high for Bitcoin against gold. And it's been maintaining that high for quite some time. So that's kind of it's a marker for us to pay attention to.
So are what we're seeing is that these ever increasing prices for Bitcoin is really the devaluation of the dollar?
Absolutely. And this chart, like we haven't looked at this a whole, like we haven't talked about these numbers a lot lately. I put these up months ago because I found it very interesting. But that, yeah, this chart really exemplifies the reason why I don't like thinking in fiat anymore. What are things worth? Well, fiat's worth nothing to me. So I don't like measuring things in terms of fiat much anymore. We use it because it gives us a measure of how things are performing in accordance to the dollar. But if I had my way, everything would be going up against gold right now. How many ounces of gold does it take to get it? How many ounces of silver does it take to get it? That's going to be a more accurate representation of its true value going forward. What you think about this, the amount of inflation, let's go back to the silver chart. Look at, where's my keyboard here? I gotta get another tablet of buttons here. Hang on a second. Get it situated. Okay. Whoa. And now my whole screen just disappeared. All right. Okay. So during this time here, we had this rise coming out of the 2008 crash where silver prices went up a significant amount. Remember, I was the idiot that bought when silver was like $35 to $40 US. That's when I first got started. And then I continued to buy as it went down. I dollar cost averaged my way in well until 2014. Yeah, in here. I was still buying in here, and then I bought again in 2019. So this during this time, the price of silver went down. But during this time, inflation continued to skyrocket. So that creates a buildup of energy. And that's not just this period. Like this manipulation has been going on for a long time. You know, in the 90s, you can see here towards the end of the 90s, lots of disjointedness. This is the weekly chart, okay? So we are definitely zoomed out. But you can see that all of this crazy volatility and these broken bars, the reason why this occurred was because of high frequency trading. The amount of people that were able to employ high frequency trading is what created this huge disruption. But the manipulation was even more they could manipulate even with more leverage because of high frequency trading. So the volatility that we saw during the 90s, you know, when silver was $4. Look at that, $4 an ounce. Throughout the 90s, the average was, you know, $5.50, between $5.50 and $4.60. The inflation was still happening. The printing was still going on. In fact, a lot of people don't know this, but that after 2008, so here's the crash of 2008 when things all fell down there towards the end, going into October 2008. During this time here, these 2 years, that's just 2 years. During this time, the United States printed more US dollars than they had in the previous 200 years combined. So where was the inflation? Because it didn't. Like, the US dollar maintained its value below the all-time high of $18. Well, I shouldn't say all-time high. That was a high from all the way from the 80s. So during this time, silver goes up 113%, sure. But I mean, all it did was recover from the crash, right? So this year, during this time, the inflation rates would have sent this skyrocketing. It would have been a hockey stick by this time, but it didn't happen because they were able to manipulate this. And another thing too that the United States is really, really good at, they've got this down to a science, is that they go around liberating companies, same thing. They liberate these countries from presidents and prime ministers they don't like. They liberate them and bring freedom and democracy and all that nonsense to the countries. But what they do when they do that is that they implement the dollar as the local means of exchange. That's what happened in Iraq after 1990. In this area here, while silver prices were dropping down to lows not seen since before the 70s, $3.40 an ounce. In this area here is where the US took over the Iraqi currency, and they devalued it down to the point where it used to be like $3 for one Iraqi dinar, and they devalued it down. So now you needed 1,000 dinar to get $1. So 3,000% decrease in the value of the Iraqi dinar. That's how they take care of the inflation in their homeland. They simply export the inflation to the countries they liberate. So that manipulation continues. They cycle through. America hasn't not been not at war every decade since the Federal Reserve was implemented. They've been at war every single decade. Liberating, I should say. They are liberating countries and hence exporting their inflation. So what we're experiencing now is a correction. All of that pent up energy, this hockey stick that we're now seeing the base of right now, this is pent up energy. All of the manipulation and the lack of evidence of inflation is going to catch up.
Question.
Yes.
So if you look back to the 1920s, I don't think there was a war on then, but that decade ended with 1929 and the crash.
Yep.
Monstrous crash. Okay, now, yes, I understand that some other losses were significant, but 1929 by comparison was probably catastrophic because it was the first time it ever happened.
Yep.
And so I'm just wondering if there is no war by which to what was the word you used? To
Export their inflation.
Export, thank you, their inflation, then there has to be an internal crash.
Yes.
So
that's kind of what I was sensing as well. Something about, I love that insight of exporting the inflation. That really is brilliant, I think, to see that in those terms. There's something in Audrey Lynn's comment before it's Audrey Lynn. Is that right? Audrey Lynn, yes. Okay. There's something about some connection to deflating, trying to deflate Bitcoin or the digital currency. I don't know the relationship there too. Could you comment on that? Is that it's like trying to deflect or trying to I don't even know what I'm saying. There's something going on around the whole camouflage.
Well, it feels like that they're using the Bitcoin as the means of deflection so that they don't collapse the U.S. economy. However, if that fails, the U.S. economy is going to burn significantly. And
Trump-
it feels as though they're trying to delay that as long as possible. And whatever that timeline looks like, I don't think it's going to be as long as they hope or as soon as we want.
Yeah, I'm of the mind that it will go on as long as the people are convinced that the dollar has dominance. That's what it boils down to. I think that that's how long it'll go. And that what this reset is it's a whole new transference of all this wealth into a completely different asset class from the traditional finance into digital finance. And that the Bitcoin, this is an interesting point. Remember that green arrow? That green arrow right there, that was at the beginning of 2024 when they started issuing the ETFs. And many of you will remember this, but that when that occurred, they were issuing, let's take a pause. Bitcoin has a limit. It's 21 million Bitcoin. You can't have more than that. It's impossible. It's blockchain. That's how many coins there are possible to be in circulation, and not all of them are in circulation. In fact, mining is capped. They can only mine so many Bitcoin per day. And I think it's like 450 right now or something like that. But it was before that, it was 900. And they halve it down. Whenever they have that shift, they half the amount that is capable of being mined per day. So now when those ETFs were launched, they were issuing them, they were selling them at a higher rate than what Bitcoin could possibly be mined. So they were essentially starting out a whole other Ponzi scheme. Where have we seen that before? Oh, right, the Federal Reserve.
Silver and gold.
And silver and gold. But the reason why I'm going to the Federal Reserve, yeah, they do it with every asset class they possibly can, especially if they can put a future, the futures are an incredible, such an incredible contract, because you're basically betting on the future. The future price, not the current price. You're betting on the future price.
So apparently there's quite an inflow right now into ETFs at the moment on Bitcoin.
Yes. Absolutely. Now's the time. It's at a low. Now,
Do you think it's going to go lower? Because Bitcoin has been decreasing the last couple of days.
Well, yeah, and if we take a look at going to the daily chart here from the all-time high that was formed October, coming back down, it's down 48%, half. It's valued at half of what it was then. Market structure is A, which is just below 50,000. So it could continue to go down, absolutely. Now's the time to buy, always. Whenever there's a dip, it's time to buy. But where am I going with this? It's actually, because remember, this is an asset, we're shifting asset classes. Traditional finance going into digital. The Federal Reserve, when they instituted their thing, it was you could borrow unlimited amounts of Federal Reserve notes. I got this ticker going on here. Let me take care of that. The Federal Reserve was lending their currency at 6%. 6%. If you borrowed $1, you had to pay it back at 6%. Do you know how much more ETFs they were selling than the amount of Bitcoin was being mined? You got it. 6%. So the ETFs are the next version of Ponzi scheme that they've been playing since the Federal Reserve's institution. It's the same model. You just take this thing, Federal Reserve note, and they say, "Oh yeah, well your U.S. Treasuries, the actual dollar, the silver dollar, now has just been inflated 6% per year. There's your inflation." And then they mitigate that and they say, "Oh no, inflation was only 2%. How did they do that?" Oh yeah, just export it. That way the people at home, they are completely unaware. They're going to complain about the high gas prices anyways. Doesn't matter what you do. But we can definitely make sure they don't see 6% inflation. That's easy. But now, what we're seeing with the Bitcoin is the same Ponzi scheme. The ETFs are becoming the currency of the institutions, not the actual Bitcoin.
Paul, could you reference like the people who are like outside of this whole realm of the fluctuation of inflation, or, you know, like the 5 or 6 people that run this whole show? And, you know, what's there, or at least that's my idea of how it's happening. Maybe I'm not looking at it correctly, but could you address that as far as like they're watching this game going on? Is it just to watch us scatter around like little mice in a labyrinth, or?
Yeah, totally. You know, when it comes right down to it, think about this. There was a study, this was back in the mid 2010s, I think, in the teens, where it was Harvard made a huge study that they showed that the infrastructure for government would be a lot more profitable if they just put a sales tax of 12% on everything other than, you know, the necessities. Kind of like what we've got in Canada. We got GST, goods and services tax. You don't have to pay GST when you get eggs or milk, but you got to pay it on discretionary spending. So a sales tax on discretionary spending of 12% would garner more revenue for the government than you could abolish income tax, you could take away corporate tax. A 12% sales tax would give more revenue, simply because when you have no income tax and no corporate tax, people spend more money. So they figured out that when people have that extra money, they do this kind of spending, and that 12% sales tax would be a savings to the people and an increase in the U.S. Treasuries. So why didn't they do it? Well, because that would mean people would have more freedom. They would have more economic freedom. Can't have that. That'd be terrible. So the system that's in place, Maureen, yeah, like what they are doing specifically is to maintain control. They don't care. They don't care how much money we make. They care about whether or not they control the populace, right? They don't even care if they make money. They don't need to make money. They can just print it. But bet your boots, the last thing they want is economic freedom. So that's, yeah, and to point at those people, well, I mean, you can get put in prison for that. Plus, when you say it, people roll their eyes. So, on the weekly chart, market structure on Bitcoin is down around between 52,000. The price very well may go down. With the inflow of ETFs, that simply means that they are they're taking orders. They're taking orders. They're not going to sell those ETFs at this point. The inflow simply means they're taking orders, because that's what they did here. They were taking orders all during this time. And then once that inflow went down, the price went up, and then they sold them on the market. Oh, I'm not showing my chart again. because it's important to recognize these patterns. Down in this area here where I've got it circled, continue. Okay, this where that yellow is, that's where they did another big the huge orders, where they're basically creating them, putting them in, taking in those orders. The institutions are saying we need to load up on them. And then what they do is that they go to the retail markets when the prices are high. And it was in this area here, September, August, September. You'll remember when we were chatting about if you go back to on YouTube, you can go and look back at in this area here is where I was like, yeah, now they're selling ETFs, so the price is going to go down. We butted up against an all-time high, right? We butted up against that all-time high, and that third one, that's when I was like, yeah, we're not going up yet, because in this area they were just selling ETFs, selling them at those high prices. Then they take all that cash from all those investors and they wait until price goes on sale. Once Bitcoin goes on sale, they bought in here. Inflows started going up in this area, 87. And there was thought, oh yeah, maybe we can go up. And I even thought to myself, look, that support was higher than the previous support. And I thought it was going to go up.
So are you saying that they actually take the cash but don't actually invest in the commodity that the ETF is denominated in? So they're doing that obviously with gold and silver too, I presume.
Here's the silver chart. What they did here was the same thing. They sold the futures at the high prices and flooded the market with more contracts. When the prices went down, the physical silver was literally gobbled up. And companies all over, like all the institutions, couldn't get enough physical silver during this time.
Sure. Okay.
So yes, they take the money and run. And they just basically go across the street to the other market when the prices are lower, once the thing's on sale.
You mean go to a different commodity, different investment?
Different investment, different financial instrument. Because here they were selling futures, selling the ETFs, selling the contracts, not the actual physical item. So they flood the market. Normally speaking, it's around 300 for every ounce of gold that is above ground and minted. For every ounce of gold that's on the market for retail, 300 people think they own it through contracts. But then when they did this, what they did was that they flooded the market with contracts. So then that created that sense in the market that, oh no, there's an overabundance. Now there's too much demand, or there's not enough demand. And so prices came down. But this is where they took all of this money that they were using, selling those futures. They took that money and then went and bought a different financial instrument altogether. Same market, different financial instrument, the physical silver. They do it, and they're doing it the same thing. Like it's the same playbook. Inflows are coming in. Why? Oh, because they need to sell those ETFs. They need to sell them when they're higher. So they gotta get people to buy them now.
So, Paul, when we, other than feeling like a complete, gullible fool, so when we learned that the strategy that's being implemented, then I mean, this is the whole point of it. Is I'm just saying this out loud, is to follow and to know when to buy and sell, at least to have maybe, like you were saying, a 60% chance of like knowing what's going on, and to keep yourself from the inflation of whatever is occurring in the economy, especially right now, because everything's changing and we're all expecting a digital world. We just don't know when.
You're encapsulating it beautifully, Maureen. Here's another way that I say it. People like to use that phrase, follow the money, in order to find out where is the corruption, right? Who benefits from all this? I have a saying, and I just simply add one word to the saying. It's one thing to follow the money. That lets you know what happened in the past. But if you want to make money, you follow the smart money. What are they doing? How are they setting themselves up to profit across 2 years, 3 years, 5 years? That's what you want to do. And you're right. We can identify those patterns easily enough between the price action and then the volumes. What kind of volume? What instrument is getting the volume? Is it the contracts or is it the physical? Right now, it's physical. The inflows, that doesn't mean that it's people buying ETFs. It means that they are increasing the volume of ETFs that they can sell later. But they are buying the physical asset so that they can produce the contracts later. Just like they did with gold and silver.
So can I ask a question?
Please.
These ETFs are paper contracts. Is
Yep.
that right? Okay.
They're not the actual asset.
Yeah. Yeah.
And they are being, I don't know what the rate is now, but at the green arrow, they were issuing, not selling, they were issuing ETFs at a rate 6% more than they were being mined. I don't know what it is now. I'd have to go and find someone that knows. I don't keep track of that stuff anymore. Once I saw that was going on, I was like, oh, okay. January 2024, that marks the date. I don't expect we'll ever see this price again. Because by this time, everybody that was in on it, they had the physical, they had purchased the actual asset. So 42, 43,000, that area, I will be very surprised if we come back to there. And if we do, amazing. It's on sale. Buy some more.
So what 42, 43,000, and what are you showing here on this graph?
This is the Bitcoin chart.
Okay.
Yep. I don't know. I might make that a little bit brighter, but in the background, can you see those letters? It's kind of tough to see with the chart there, but
yeah,
those faint letters there, that's the asset. I'll make it a little bit brighter because it is good to have that as a context. Canvas, scales, margins. Is it the symbol? Precision, status. I don't know. I'll have to find that out. Countdown to bar close. Canvas, here we go. It'll be in here. No, maybe not. I'll have to find that later. Don't want to waste my time doing that right now. But yeah, this is the Bitcoin chart. So right now, market is at 64. Market structure though is on the weekly chart is down here. 52, 53. If we go down, that's probably where we're going to head next. Bitcoin dominance, though, this one here gives us an indication on where the money is being allocated. Is it going into Bitcoin or is it going into altcoins? And we do want it to go into altcoins. From an investor's perspective, we want it to go into altcoins. Simply because that's where the businesses are. Bitcoin is, it's the gold standard. Ethereum is the silver standard. That's the equivalent. And they're doing ETFs on this as well. The green arrow marks when that got started. Oh, look at that, eh? They started it at 2,200. And the price right now is lower. But I mean, when we were up here, here is when they were making record amount of sales. Audrey Lynn will remember this area here. This was September. It was at the beginning of September that I told her you might want to sell off some ADA. And that was the strategy. Because they were selling the ETFs at the record rates here when it was the highest ever. And of course, they were just capitalizing on the greed because that's how the price action works, right? When the prices go up and they create new highs all the time, greed goes up. So it's easier to sell those contracts at those higher prices. But waiting for the price to go down to take that money and actually buy the asset on chain. ADA showing some life. I put up a chart on this in the Telegram channel, I think yesterday. Day before. Yesterday? I can't remember. But we've got nice progressively growing highs here. And that high was what I was looking for. So very good sign. Remember when we were down here, I was like, if we go up, folks, if we go up and we don't beat out this previous high, I'm going to suggest that people sell. Well, we went up and we actually beat out that high. So statistically, now we're waiting. But I would right now, I would actually make a purchase because we've come down and we're at this pivot point here. Place another pending order for the lower price just in case. And I would put that order just above the previous low so that you can catch it. But that's the pivot point those are the pivot points right now. I'm thinking that if all goes well right now, statistically, 60% chance of creating another high. And that this next high at 34 cents, that's a major point. That's a major pivot point in the past. Going on to midnight. This is one of our favorite coins right now because of what it's positioned to do. Oh, and guess what? Somebody out there, I don't know much about it. I just saw it on my feed today. I'm going to dive into it just to go look and have just a look-see. They've created a metaverse with Midnight. It's called midnight.city. And you can go there, create a profile, and they are exchanging digital assets behind night. At the end of the month, when the main net goes live, that's going to make it possible for you to trade virtually real assets in that metaverse using Midnight to ghost your to anonymize the parameters of your contracts in a virtual market.
Paul, is that the end of February or the end of March?
End of March. The last week of March is when they're expecting to launch the main net. Right now, everything is still in test. You can get the coin, but the contracts and all the processing of those contracts is still only happening on testnet right now.
And can we go there? Can we go to midnight.city?
Sure. Let's go check it out.
Let's check it out.
What did you say the name was?
Midnight.city.
Oh, hilarious.
Yeah, there you go. Midnight City is live. Step inside. So you got your little avatars. You just go around talking to each other. You can go and hunt buffalo. You can bring that buffalo into town and go to market and all the rest.
What is the likelihood that this is tied to a game, like they're viewing it from a gaming perspective? Is that in fact what they're doing?
Already there, brother. Already there. That's why I think the gaming industry is actually going to lead this whole movement that I talk about. I think the gaming industry is literally going to save the world. because they can do it. Yeah, think about it. We talk about the inflation of the U.S. dollar. What is the U.S. dollar except a metaverse in-game currency? Well, here's another metaverse, and they got their in-game currency. It's called Midnight. So it's the same thing. It's just now we can do it at a micro level. We can do it with micro communities. We don't have to be a part of a 300 million membership.
Paul, can we add a few of those gaming coins to the market analysis?
Yeah, I've got a few up there. I've got a few. I don't have them all simply because right now I don't think gaming is going to be the big thing for the next little while. I think the big thing is we're going to see are the main layer main layer 1 altcoins, and then the layer 2s that are going to provide. Think of it this way: in the gold rush, who made the most money in the gold rush? Does anybody know? It wasn't the people mining the gold.
It was the assayer or whatever. Brokers.
Not even them. They made money too, but they didn't make the most money.
The people supplying the picks and the axes and the shovels and
The mining equipment.
they made all the money.
Yes. So what's the mining equipment in digital assets? Desync.
Hello?
Storage. It's where are you putting your data? Where are you putting your data when you mine it? Where are you putting it? That is going to be the largest bubble. And bubble, it's going to go up and it's going to go down, but it will provide the foundation for the next wave, because this has to be in place. Where do people store their data after they create it? Desync is a great place to put that. The big companies, that's why I bring up BitTensor in market analysis. I'm not going to buy it, and I'm never going to recommend anybody buy it, but I bring up the chart because this is what the big companies are having to. They're relying on BitTensor as a major infrastructure for exchanging data and storing it. So the big companies like the Gemini, Meta, or I should say Google, Meta. Google has Gemini, Meta has Llama. These LLM models, they're generating the data. Where does that get stored? BitTensor is that infrastructure to store the data. Desync is where we would go. Storage is another one. We talk about storage. I should have this one up on the chart because this one's going to take off a lot more. Let's go to, I would like Kraken. There we go. Oh, that's against the euro. Wow. Oh. Storage US, and I want exchanges. Where is Kraken US dollar? There we go. So this is the storage token, and I have stored. The amount that you have to pay for decentralized storage is pennies compared to what you'd have to do. Like if you were to use, if you had to upgrade your Google account to store data, you're looking at $15, $20 a month. I've been using storage now for almost 2 years, and I still have yet to pay $20 to them. Because it's just so much cheaper when it's self-governed. Imagine that. So, the price of storage, storage is where we would go. Desync is where we would go. BitTensor is where the big companies go to store that data. So
I think that's really valuable, Paul. I think that, what do you call that? Slash that or dash that or whatever.
Yep, hash that. Desync, storage, and all storage. You know what? Actually, this brings up a good point. Time to bring out the chalkboard, because what we're going through, this bubble is actually going to occur in waves. And I've talked about this in the past, but it's been a while, so this will be a great refresher. Yeah, da-dum, GIMP and fade. Oh, look at that. I still have this up. Okay. So I think what we're going to see is that we're going to see this bubble occur in waves. I'm going to zoom out a little bit and draw this out like so. Now, the bubble will go up and then it'll come down, but it won't go down as low as where it started. That's just the way that goes. That's one. But then there's another one. And I'm going to grab pink now. Then there's going to be another one, and it comes in around here. And then it's going to do that. And then the last one will make it white, mostly because I don't have another color set up right now. And it's going to go like this. And what we're going to see is the green one
Are these cycles or are these just simply different stages of the market?
Great
Different
question.
waves.
Cycles and stages. This would be the first one here. This is going to be infrastructure. So, storage, desync. This is why these were the first ones that I went to the table to buy when we first started doing market analysis almost 2 years ago. These were the first ones that I started buying. Tau, BitTensor. These are going to experience that first wave. Once that infrastructure is in place and everybody's on board, we're going to see the next phase come through. What's the next phase? Anybody guess? I actually think it's going to be AI. Because once the infrastructure is there, once that foundation is there, we're going to be able to amplify what we do with AI. Why? Because the infrastructure is there. We can save it. We've got the mining tools now. We've got the ability to take this data and put it somewhere. Now we can really start to ramp things up with AI and generate data. Because that's all it's doing. It's a generative models. It's going to be the generation of data era. And while that's happening, and I would say that this white line, that's probably going to be a little bit closer than what I've got here. So I'm not going to do that. I would shift this white line over a little bit because I think that we're going to see that white line probably show up around here where it'll peak out, probably closer to, well, that is not white. That white line will probably show up like this, that close. And that white line, I think, because once you have those in place, the next level of the next evolution of this would be, okay, so we have the infrastructure and we've got the machines that can just create content nonstop. What's that third bubble? Gaming. My intention is by the time this bubble is starting, at this point here, let's put a star. At this point here, I want to be in position where we create a game. Next Gen Merchants creates a game. And the game gets people to practice in a simulation all of the principles that I've been teaching for the last couple of years online. And I think that the gaming industry, because of how widespread it will be, you think about it, the technology coming forward, all being digital, it's going to be crazy what will be produced. Why? Because gaming, traditionally, if I wanted to get into gaming, if I wanted to get into developing games, the largest expense, the biggest thing that costs is programmers. These people, because of their skills and abilities, most of them have a pretty good education. You got to go 4 or 5 years of studying programming to be a really good programmer. And these guys, when they get out of school, they're getting like they're getting like $150 to $250 an hour. So when you're developing games, this is your biggest expense. But what do? What do these programmers do? The same thing you and I do. They push buttons. That's all they do. They just push buttons, and they just know how to push those buttons in really good patterns that get a result. But the thing is that these programmers are already being laid off because they're not needed for this part. They're not needed to build the infrastructure anymore. They're the good ones, the ones that are probably paid on the higher end. The reason they're paid at the higher end is because they're just better at it. They are going to be the ones checking the infrastructure that gets built by the machine that can push the buttons way faster than they can. In fact, they don't even measure it in time anymore. The machines do not measure their results in time. We do, because we've been having to pay people hourly. Did you know that nobody was paid hourly before 1638? Nobody was paid hourly before 1638. The first time that people got paid hourly was at a textile company where they were building the first versions of the third industrial revolution, the assembly line. They didn't want to pay people per unit. They wanted to pay people per hour because they were finding out that machinery was able to do things more efficiently. And so they didn't want to pay people by the unit because that was going to cost too much. So they started paying people by the hour. Well, the machines do not get paid by the hour. They get paid by the digit. They're called tokens.
Which is similar to being paid by the unit.
Correct.
Only much smaller.
Small, tiny little micro units. And AI measures them, all of the models measure them in tokens. You can go to any model and you say, hey, in this session, make sure that we stay below 30% of the token window. You can say that, and it knows exactly what you're talking about. All of them have the same language. They know exactly what a token is. So now the infrastructure is being built not by programmers, but by button pushers. So the programmers at the high end, all they do is they're just checking the work and making sure that the integrity is there, because AI makes mistakes like humans. But I mean, think about it. If you're making let's say you make the same amount of mistakes as a human, the percentage, let's say for instance, because right now they do this benchmarking. So coding has a benchmark, and I can't remember what the name of that benchmark is. But Claude Code is the most advanced coding out there right now. And it is, the benchmark is, it's numbered 84, sorry. Another model is GLM. It's an open source model, way cheaper, and it scores 82. Way cheaper, like 6 times cheaper, and it scores 82. Well, with this percentile being so negligible, all you got to do is go and make corrections, right? But those, if you're doing it at high volume, those corrections can be still done way faster than a human would do it the first run. After a human does it, you still have to go through and review it. But a human will take 4 days, and the machine will take 2 hours. So you just go and make the corrections, but you're not measuring it in terms of time, you're all measuring it in terms of tokens. Now it just boils down to how fast can you compute it.
Ian, you're not muted.
Oh, yeah. The
My
typing
apologies. No, I'll take care of that.
Thank you.
there.
Sorry
Thanks for
about
bringing
that.
that up, Maureen.
All right.
Okay, so when the machines are doing the coding, once that infrastructure is there, that next phase of this bubble will be AI, where now AI can fly because the mining equipment has been established. We figured out what that mining equipment needs to look like.
Paul,
AI,
before we go on, there's a little lack of understanding here about what a token, how a token is evaluated, or what is it? I mean, I kind of know what it is, but I can't apply it to how a programmer or a machine would get quantified in tokens. I guess, is it just, okay, that good. Characters, 50 characters per second, per instant, per,
remember, it's all binary code, right?
right. Oh,
Yeah.
okay. All right. Thank you.
You're welcome. You're welcome. And it's about this. Some models, because they're more efficient, they're 80 characters. Others are 30. It fluctuates.
And that makes total sense to me now. You just
Yep.
closed the loop in that. Thank you so much.
Most welcome. Most welcome.
So then it would be reasonable when one begins to work with a particular model is to ask it how many tokens, how many characters per token does it use?
Yeah, helps with budgeting.
Yeah.
Yeah, totally.
Is that why you said 30% of the tokens? Use 30%, because then
Yeah, so there's a thing called token rot. And that is different models have different context windows capacity. Okay, so ChatGPT, probably one of the most popular ones. ChatGPT has the capacity of 1 million tokens per session. So what's a session? A conversation. Just think of it as a conversation. I'm going to conduct this one objective, and it's going to take me 1 session. So ChatGPT has the ability to process or encapsulate about 1 million tokens per session. Claude, it doesn't do much more than 200,000. And people say, oh, well, that means ChatGPT is more powerful. No, it means ChatGPT has a larger context window. Claude has deep reasoning. This capacity allows it to accomplish more with less tokens because it's able to process those tokens more efficiently. ChatGPT is one of the least efficient ones out there. That's why it has to have 1 million tokens in a session, because it can't process things nearly as efficiently. Now, the people say, well, isn't the larger context going to confuse ChatGPT? Yeah, that's why there's token rot. The more tokens you are using in a session, the less effective they become. So what I do is that when I'm in a session, I will say, don't expect, I'll say, let me know when we're at 30%, because I know that after that point, the efficiency of my tokens are going down. I would rather, and this is a very common thing, I would rather at this point do what's called a handoff. So I can tell the machine, create a handoff document for me at this point. Create a handoff document for me to start a new session so that I don't have so much token rot. Okay, now I'm talking a little bit about strategy, but I'm getting somewhere. Don't worry. I'm actually getting somewhere with this. With the infrastructure built, AI being able to generate these tokens, generate the ones and zeros, makes it where the developers of games are no longer required. Why? Because now when you get the game and you put it, let's say, for instance, you install it on your computer. Here's the game. In the past, that game required an environment. You have an avatar in the game, kind of like we have here in the game we call Life. We have an avatar, remember? The physical body, it's not you, it's just the avatar. You are the spark of the eternal. So you get to play this game. You get to inhabit an avatar. Well, in that environment is the biggest thing. Here, look at Earth. The environment is huge. We can roam about. But in a game, you have to generate that environment before you ship the game. So that when people install the game, there's an environment for their avatar. But with AI, you get the game, and now you have the base code, they call it. That base code has no environment. All it has are rules for the environment. When you have the base code on your computer, I'm going to draw buttons here. When you have the base code on your computer follows the rules using an LLM to generate the environment. Now your character has an environment to play in, but you didn't have to write a single line of code to generate the environment. And when you are building games, when you're building these things, gaming budgets, 80% is spent on programmers generating code to build an environment. But now you don't need that anymore because the environment can be generated by a machine in real time. So as your avatar moves through the environment simply generates ahead of it. So now gaming drops in price. What does that do? Lowers the barrier of entry, sure, but that'll create a bubble where now everybody's just getting a game. Why? Because it's the new fandangled thing. Look, I can get this game for $5, put it on my phone, and it's like having a little holodeck where I can just move my avatar around and the environment generates right in front of it, simply following the rules that were set by a master programmer. And it's said, this is the saying, that the ratio, so the programmer now only has to put in for, let's do it with numbers. Let's say a programmer puts in 1,000 characters. If he's good, the programmer puts in 1,000 characters, and that translates into 10,000 characters that the LLM can generate on its own. So it's a 10 to 1. And that will increase as time goes on, especially as that infrastructure is built. So, zooming out now, you can start to see a little bit on how this bubble is actually going to have 3 different phases to it in different sectors, because they need to have the infrastructure in order for AI's generation to be saved somewhere. This is why infrastructure, this is funny. NVIDIA, we've talked about how funny those guys are and how they're just a part of a big money laundering scheme with all the other companies for compute. Yeah. 2 years ago, while they were building chips for all of the companies to run their LLMs, they said, we're going to invest in cloud computing, because all of the information that all of those different models are going to be generating, they need to be stored somewhere. So NVIDIA has a second business, just storing the data that is generated by the chips they distribute. So that's the infrastructure bubble.
What
Once
about Musk in there and saying that we're going to store in outer space?
Oh, that's even a better infrastructure, because now you don't have to spend so much money on cooling.
Yeah.
There's an $80 billion infrastructure being built by Mr. Wonderful here in Canada. What's his name? Someone remind me his name. He brands himself as Mr. Wonderful. He was even threatening to run for prime minister.
Yeah, I think we know who you're talking about.
Leary, Kevin O'Leary. He's building an $80 billion infrastructure near Grand Prairie, because that way 8 months of the year his cooling costs are a lot cheaper than if he was to have it, down in the States or something like that. Infrastructure is going to be the biggest thing. But yeah, Elon, well, that's what Stargate was all about, Project Stargate. Elon got the funding for that like almost a decade ago. He got the funding for Project Stargate, where the infrastructure was going to be in space. Where do you think how did Starlink get going? Starlink, every one of those satellites is a node for that space-based infrastructure. Everything that you're seeing being built down on the ground is part of the bubble. That's part of the rug pull. That's the public-facing thing. So once that infrastructure is in place, AI can go to town. And once AI has gone to town, and we've got that correlation back and forth between those two, gaming will take off. So that's why we started off with storage, desync, and we are tracking the Tau bit tensor. We're tracking it because it gives us a pulse on the bubble. Then we're going to see AI. That's when we're going to see the companies like Anthropic. Because right now, they're in a bubble too, but it's nothing yet. Nothing. It's garnered a lot of interest, but it hasn't hockey sticked.
Paul, I just want you to know that when you said holodeck, it's sort of like opened a whole door for me to really see what was going on as far as gaming is concerned. So thank you for mentioning that. I had a reference.
You are so welcome. You are so welcome. I'm going to finish off with this, and then we can... Oh, yeah, it's already time to finish this up. I'm going to finish with this. Folks, all of this is just matrix nonsense. I am of the belief that we're going to go through all of this, and humanity itself is going to deteriorate globally. We're going to see a degeneration of intelligence simply because people are going to be relying on artificial intelligence. And there's going to be a point where all of this is going to come crashing down, and we're all going to go back to how it was before, where we're, I don't want to use the word primitive, simple maybe, where the rhythm of our days isn't so fast-paced. Right now, it feels like a race. And I get myself caught up in this race way too often, where I'm like, ooh, look at all these cool things we can do with AI. But my end game, the reason I'm doing this, the reason why I'm immersing myself in this is because I believe that I was called to be a fisher of men. And that the gaming industry will provide me with an opportunity to reach people in a way that lands for them. I'm going to be able to help them a lot more by presenting these principles in the form of a game that people can interact with a fictitious avatar, so that they can see the parallels in their own lives. And that game is going to be a work of art. And between now and when that game is made, the resources that I need to create a game that allows people to parallel their life, where they could see opportunities in their real life to make improvements because they have an avatar that they get to practice in a game, in a simulation. I think, well, I know that the infrastructure needed to build such a game will be coming from this. And I think that this here, this is going to be about 20x in value. Like from where we are now to where we can be, this will be a 20x. Shucks, desync. Just look at desync. I'll bring this up. Desync is down just below 10 cents right now. Let's go to the daily chart and remember that most of the money is made in recovery, right? Well, where was the high? 392. So between here and recovery, no accumulation necessary, 4,000%. That's 40x. All I'm looking for is 20. And that's just 20x in the infrastructure phase. The next one. This one is going to be another 20x. So you can bet your boots that I'm going to take 10 of that x from here and I'm going to make it 20. Now, what does that mean? I'll have 200x in the end after that second bubble. You can bet your boots I'm going to take out half of that. You can bet your boots I'll take half of that 20x and I'll be starting that. Oh. Right here is where I'll be putting in 100. Already I will have profited a whole pile. But I'm going to make another investment of 100 of what I started with. And I'm going to take this one, and this will be another 20x. Now I'll have 2,000x from when I started. And you can bet your boots that I will be utilizing that to benefit humanity by showing them how to play the game of life. And all y'all are invited to help me build that game, because I can't do it by myself. We all have to do this. This is all something that we do together. This isn't something that Paul does. This is something Next Gen merchants do. Hence the start of the treasury. Hence the start of governance. Where do we put that money? How do we invest it? How do we get this to build this game in the future? So that that game is ready. So that at this point here, when people are absolutely going crazy over games, when their attention on gaming is at the highest, when they are the most greedy in the market, how do we capitalize on their greed and bring them into the fold where we can show them the truths that they need That's what the next gen merchant's treasury will do. And yes, I'm going to take a little bit of cream off the top for myself. And then
I'm just thinking of the Morton girl image with that and the infinity of the fractal.
yeah,
What you're talking about, how this is already the same game and somebody else designed that, and now we're going to design it. I mean, we're like, okay, but I know what you mean. It's like I'm the witness. I feel like the witness to you doing this and wanting to hold it and move it forward in the most immaculate way possible.
it is such a blessing to be here in this time with all of you.
It is actually a living prayer, isn't it?
Yeah, I like that. Yeah. Imagine us, the humble next generation of merchant, being a soldier for prosperity, being a good news merchant, leveraging the nature of humanity to even improve upon it, instead of watch it go into degeneration by following those inclinations. We can leverage those inclinations and curb that degeneration. I was earlier today, there was a post about the horrors that are occurring in education right now. There was a guy that was sharing how his 16-year-old didn't wake up in time for school, and he was like, you got to get up for school, let's go, and it had been going on for like a week. Why are you not even bothering going to school? His son finally said, look, Dad, I don't have to go to school anymore to complete my assignments. All I have to do is show up at the end of class and hand in the assignments. I don't have to go to school to accomplish them. In fact, I get a sheet from my teacher and I can scan it with the scanner, and the homework gets done for me at night. I don't have to go to school. And his dad was like, yeah, you do. You have to go to school. You have to go to school. And he said, Dad, I'm getting A's. Shut up. You wanted me to get A's. I'm getting A's. Leave me alone. And this brought up a very, very good point. We, people, have been for hundreds of years programmed like an AI, programmed to simply be better at regurgitating information. So if that's the benchmark that we're putting to school, you just need to get better at regurgitating information. What's 2 + 2? 4. Good job. You regurgitated the information. You're so smart. Get a gold star. Of course, when we had machines being able to do the regurgitation, the regurgitation machine that gets graded on how well it regurgitates information, of course we would get replaced. Because the machine can regurgitate the information way faster. Now people don't have to show up for school. That's a good thing. School's a terrible place to go. All you do is, someone at the front says, what's 2 + 2? And someone in the back says, 4. Good job. Come on. We're capable of so much more. Let the machine do the information regurgitation and let us become more intelligent. Audrey Lynn?
Causes me to be curious about how this young man is actually learning.
He's not learning anything.
No, he's not.
He's learning how to get a machine to regurgitate the information which he needs to get a grade.
Well, he is learning how to beat the system. at its own game.
I would
So-
do it.
For me, it's the knowledge. I'm more concerned that this young man's not getting knowledge that could support him moving forward. I mean,
Yeah.
I get it.
But think about it. Think about it. In school, Audrey,
I always find that there's gleanings. There's not necessarily vast quantities of usable knowledge, but there's gleanings. And if I don't participate, whether it's reading or being a part of the group or whatever the participation looks like, I miss that opportunity for those gleanings. And I feel for that young man.
see, now that to me is important, just what you said, is what you get out of it. But when you learn to regurgitate, which is accepting an outer authority and make that pathway really deep and entrenched in your mind and how you look to another to tell you how to succeed in life. Do you see what I'm saying? That you're supplanting your own gleamings. The gleamings and the self-directed learning and the emergence and the pattern when you discuss and you do all of that and you work on projects together, just really like what we're doing here. When you learn to do that and to trust, oh yeah, this is coming up, this is important to me, this is how I want to do it. Not this is what somebody told me I needed to do, and have a life that isn't sovereign, really. And we're not taught, we're taught the opposite of sovereign. But there are education programs out there that do that self-directed learning, student learning, and you learn how to do that, and you learn how to critical think, and you learn the whole Socratic, Aristotelian kind of thing. There are schools that do that, but they're the minority.
We have been directed away from listening to our own inner authority, our own inner voices of what is correct for us to do in any given moment, in any given situation. Because
And that's the real abuse. That's the abuse that happens. It's such, anyway, it's insidious. But Paul, I love the whole thing about witnessing a game that teaches you, oh, if I do this, then this happens. Naturally, this is what happens. Or this is the venue, this is the environment. You look at the environment, what does it want from me? That's great. That's intelligence. That's biointelligence. So I love that, Paul, and I think that's a great experience of life to have. And a game would be a fabulous way to learn. What a wonderful way. And people are like this anyway. So it's like, this is the addiction, right? So to use the addiction to actually do something that can break the addiction, yeah, it's great. It's kind of the irony of addiction. Yeah. I can't see your name. I know Audrey Lynn, but I can't see the gentleman.
Oh, that's Gary.
Gary. Hi, Gary. I'm Maureen. I think we've met before. Good to see you. And I remember you're from Canada. So,
Yes.
yeah. The three of you from Canada, and I'm the lone ranger here.
you
I'd
hold
like-
this up for us.
Oh, yeah. Well, I would like to live next door to you, Audrey Lynn. I think we could have so much fun.
My friend, virtually.
We could have a lot of fun. Neighbors.
Oh, yeah.
I would love to go to market with you guys. And, I'd just love to be in that. Talk about a game. I'll keep a game like that. I love the holodeck. I think that's a great. The only thing that's missing is of course the reality of another being with you.
Mm-hmm.
But it does form neural pathways, and maybe there's a way to invite another person. I don't know. I think they have two people like fighting in the same holodeck, right? I think they do that. They play with two people. Anyway, I gotta go. I gotta water before it gets too hot.
Oh, okay. Sounds good. Have a good
Thank
rest
you.
of the day.
Good being with you guys. Very nice. Bye-bye.
Gary, you and I are still hanging out after, right?
Yes.
Awesome. Sounds good. Let's do that. I'll end the stream here. Go ahead and